Hey guys, welcome back to my weekly options video series where I'll be sharing with you my options trading game plan for the upcoming week. If you're new to my channel, I post my game plan videos every Sunday, so be sure to subscribe to my channel if you don't want to miss any of the trading opportunities that I'll be sharing. Once again, if you're new to trading options, I would definitely recommend you to start paper trading using the Thinkorswim platform first. I hope you'll find today's video useful. As usual, I'll start off with a quick recap of the trading opportunities I talked about in my last video, so let's get started. So this week has been quite a choppy week for the market, I would say, but as of Friday's close, you can see that almost all the stocks in the various sectors are back up in green again. And if you take a look at the S&P chart, you can see that prices have been hovering around the $411, $416 range for the entire week. I was expecting a deeper pullback, probably to the 20-day moving average level, but that didn't really happen. So prices did a slight correction on Monday and Tuesday and pretty much hovered around this level for the entire week. The earnings season so far has been pretty good, I would say. But next week, we do have all the big tech names coming out with their earnings. So we have Microsoft, Google, Apple, Tesla, Facebook. All the big tech names will be coming out with their earnings. I do expect the market to be slightly more volatile next week, depending on how the earnings result pan out. But we shall see what happens next week. So coming back to my Excel spreadsheet, I will talk about Apple first. So I actually did quite a number of adjustments to my Apple position this week. If you recall in last week's video, I did briefly mention that my diagonal spread position for Apple, I was actually only left with the long call position because I have already closed off my short call on the 5th of April. So the reason why I did that back then was because I was expecting the price of Apple to go up way higher, but that didn't really happen. So from 5th of April all the way to this week, I was actually only holding the long call position. So on the 20th of April, I decided to enter two short calls for Apple, expiring on the 30th of April, strike price of $145. So my Apple position is back to a diagonal spread already, and I sold it for a credit of 79 cents per contract. So some of you have been asking, like, how do I determine which strike price to choose, or how far out should my short call be? So typically before I roll over my short call or I decide to enter a short call, I will look at the short call and see that if I add this particular short call position, will my theta position, my total theta become positive for my diagonal spread. So I think that's one of the main considerations that I have. So whenever I roll my short call, I need to make sure that after rolling, my total theta is still a positive. So I'm benefiting from the time decay. And the next thing that I actually looked out for my strike price is actually I select the strike price based on whether there's a strong resistance level. So later on when we look at the chart of Apple, you can see that actually the $145 strike is actually the major resistance for Apple, and that was the reason why I selected the $145 strike. So you can also see that I have actually entered a new position for Apple also on the 20th of April, also a diagonal spread this time. So this is actually purely a speculative earnings play. So as you know, Apple is going to announce their earnings on the 28th of April after market hours. So I actually entered a diagonal spread for this. I am hoping or expecting the prices to go up after the earnings. So I entered this diagonal spread. As you can see also this time round, I'm entering only one contract instead of the usual four. So because this is an entirely speculative play, and I'm expecting the prices to go up for Apple, so I just entered this position, additional position this week. So coming back to the chart for Apple, just now earlier on I mentioned that I selected the $145 strike price for Apple. So you can see that the $145 strike price is hovering around this level, and this is likely going. This was the all-time high previously, and I do expect prices to face some resistance when they reach this level. So that's why I selected this as the strike price for my short call. So typically when I roll over my short call or I enter any new short call position, I'll typically look at the chart first and decide where are the major resistance level, and I'll typically place my short call positions over there. So moving on to the next stock in my spreadsheet, that will be Nike. So if you recall in last week's video, I also did mention that I entered 3 diagonal spread contracts for Nike on the 12th of April. Right now, the total P&L is showing a negative $1,000. So unfortunately, this week for Nike, Nike actually broke down below the 150-day moving average, but it's still finding support at the 200-day moving average. So I'm still holding on to this position because it has not hit my exit strategy yet. So for Nike, I will likely cut loss if it hits 50% of my max loss for the trade, or if it breaks down below the 200-day moving average. So right now, neither of the conditions have been met, so I'm still holding on to the position for Nike. So the only change that I did for Nike this week was to roll the short call. So I had the short call that was expiring on the 23rd of April, and I rolled it to the short call that was expiring on the 7th of May, strike price of $135, which I'll be showing you on the chart later, for a credit of 78 cents per contract. So let's take a look at the charts. So you can see that Nike broke down below the 150-day moving average, which is the line in green, on the 19th of April on Monday. And right now it's been finding support on the 200-day moving average. So if this is broken, I will definitely cut loss for Nike. But as of now, it's still finding support on the 200-day moving average. So hopefully this will continue to hold. And for the short call position that I mentioned earlier, I actually selected the $135 strike price, which is around here, I would say. Yeah, so I expect this to be the next resistance level for Nike, which is around the 150-day moving average. So that's why I selected the $135 strike price. So the next stock on the list would be Zoom. Not much activity for Zoom this week. Prices have been pretty much range bound. So the only thing that I did for Zoom this week was to roll my short call that was expiring earlier on the 23rd of April. I rolled it to the short call that was expiring on the 30th of April. Strike price of $355, which I can show you later on the chart, for a credit of $1.91. So you can see that my Zoom trade has become profitable because I pocketed the entire $420 from my earlier short call. And if you take a look at the daily candlestick chart, you can see that prices have been pretty much range bound between the $315 level and the $345 level. So hopefully prices will continue to hold. I do expect this 20-day moving average to be a strong support line for Zoom, and also this $315 price level to be a strong support level as well. So earlier on, I did mention that I selected a $355 strike price for my short call, which is the price level around here. So I do expect this to be the next resistance level for Zoom, and that's why I selected the $355 strike price. And if you take a look at the weekly candlestick chart, you can also see that the prices are actually hovering around the 50-day moving average. So there seems to be quite a lot of support levels at this current price level. So I do expect the prices of Zoom to continue to hold for at least the next week. Moving on to the next in the list would be Disney. So unfortunately for Disney, it shared the same fate with Nike. It broke past one of the support levels this week. It broke past the 50-day moving average and is now finding support on the 100-day moving average. So later on, when we move over to the charts, I can show you some of the support levels that has been broken. So the only thing that I did for Disney this week was to roll my short call position. I earlier had the 22 contracts that was expiring on the 23rd of April, and I wrote it to the one that's expiring on the 30th of April, strike price of $190. So I wrote it for a credit of 87 cents per contract. So same thing for Disney, it has not reached any of my exit strategy yet. So I will continue to hold Disney until the support levels have been broken, or if it hits 50% of my max loss for the trade. So if you take a look at the daily candlestick chart, you can see that on the 20th of April, which is Tuesday, prices actually broke below the 50-day moving average, which was originally going to be a support for Disney, and now it's hovering around above the 100-day moving average. So hopefully prices can continue to move in this direction, and I can continue to roll my short call position and make this trade back to a profitable one. So if you recall in last week's video, I did mention that I was watching the stock PLTR pretty closely. So if there's any bullish signal this week, I will likely enter a diagonal spread position. So I actually did enter a diagonal spread position for PLTR this week on the 21st of April, which is the Wednesday, and I entered a total of 7 contracts. My long call position is expiring on the 20th of August. My short call position is expiring on the 30th of April. From the strike price I've selected is the $25.50 strike price. So if you take a look over at the daily candlestick chart, you can see that on the 21st of April, which is this green bullish candle over here, I entered a total of 7 contracts for my diagonal spread. You can see that prices have been pretty much hovering around this $21 range, $24 range for the last couple of weeks. And I do expect the $21 price level to be a strong support level for PLTR. And also earlier on, I did mention that my short call, the strike price of my short call was $25.50, which is around this price level here. So the reason why I selected this is because I expect this to be a pretty much strong resistance level, the next resistance level for PLTR, because previously it tried to break past this $25.50, but was unable to do so. So likely in the next time when it meets the $25.50, it will face some resistance at this price level. And if you take a look at the weekly candlestick chart, you can see that prices have been pretty much hovering around the 20-day moving average. The next support line, which is the line in blue, is the 50-day moving average. So you can see that there's actually quite a lot of support levels for PLTR going forward, and hopefully prices will continue to hover around this range so that I can continue to roll my short call and collect more time premium. So the last stock on the list would be Domino's Pizza. If you recall, in last week's video, I did share with you that another strategy which I employ pretty often would be the double calendar spread, and this is purely an earnings play. So for the double calendar spread, one thing you need to know is that if you enter for this particular strategy, you need to close the position before the earnings are released. Otherwise, the volatility crash might actually wipe out all your earnings for the double calendar spread. So for Domino's Pizza, I actually entered the double calendar spread on the 13th of April. Their earnings are due to be released on the 29th of April before the market is open. And I entered a total of 15 contracts for this particular position. So I've actually closed off the position already, and I closed off on the 19th of April for a profit of $840. So I'd say that this is actually a pretty good trade. If you look at the this column over here, when I entered the 15 contracts, Thinkorswim actually blocked off $2,250 from my buying power, and I closed it for a profit of $840. So that is more than a 30% return on investment within a short span of less than a week. So I would say that this is actually a pretty good trade, I would say. And I just took the money and I left. So moving forward, there will be more companies releasing their earnings, and hopefully I can deploy. There are more setups like this where I can deploy my double calendar strategy, and I can share with you guys as well. So that's all for the recap for this week. Let's move on to the trading opportunities for next week. So in today's video, I'll be sharing with you 2 trading opportunities for next week. The first opportunity would be the biotech ETF, ticker symbol XBI. So if you recall, 2 weeks ago, I did mention in one of my videos that XBI is already on my watch list. So back then, the prices were actually hovering around the 150-day moving average with the line green, and also the 200-day moving average. And I wasn't too sure if the 200-day moving average will continue to hold for the stock. As you can see, on some of the days it actually closed below the 200-day moving average. So I wasn't really sure, and I didn't really enter any position for this. So moving forward, it seems like the prices are still hovering around this 200-day moving average, and as of Friday it closed way above the 200-day moving average. So hopefully there is a slight retracement next week, and I will likely enter a similar diagonal spread position for this. And if you look at the weekly candlestick chart, you can see that prices are also pretty much supported on the 50-day moving average, which is the line in blue. So likely for my plan for this particular trade, if I do enter, is that I will likely cut loss if the prices fall below this particular $120 price level, or if it hits 50% of my max loss for the trade. So we shall see what happens next week. So the next opportunity would be Salesforce.com, ticker symbol CRM. I've been monitoring this stock for a couple of weeks already. I actually missed an opportunity to enter the stock around here. Right now, prices are consolidating over at the $228, $230 price level, and as of Friday's close, it actually hit the 150-day moving average, which is the line in green, and it has not broken past this 150-day moving average yet. So hopefully next week there's a slight retracement, and I can actually enter a diagonal spread position for this. And if you take a look over at the weekly candlestick chart, you can see that previously the 50-day move, it was hovering around the 50-day moving average, which is the line in blue. Right now it has closed above the 20-day moving average, which is the line in pink. So if I do enter a diagonal spread position for this, I will likely cut loss if prices fall below this 50-day moving average, or if it hits 50% of my max loss for the trade. So let's see what happens next week. That's pretty much my game plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comments section below, and I'll try my best to answer them. If you are new to my channel and enjoyed watching this video, be sure to subscribe, as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading, and thanks for watching.